The Mill Valley real estate market has been one of the most competitive and explosive real estate markets in, I would say, the entire country, let alone California, let alone the Bay Area, let alone Marin, all year. When we sold 196 Edgewood, it went into contract at the end of May, closed late June. So like right at the end of Q2. The buyer demand was so insatiable that we honestly we didn't really know how to price this listing, and we definitely didn't really know how to advise our sellers what it could potentially sell for, purely because demand was just so high. Now, we ultimately advised it probably sell for 1.8. It ended up selling for 2,150 in 24 hours before going on the market, just because Mill Valley was bonkers. Like, it was just, there was so many people fighting for houses. And after that sale, I really felt the market taper off a little bit, or at least slow down a little bit from the median price single family homes, which typically had sort of 40 to 50 disclosure packets out to buyers. That sort of dropped to 25 to 30. And sort of the amount of offers coming in were less competitive across the median price point board than what I felt towards the end of Q2. And I think the main reason that actually happened was buyers at the median price point began to genuinely see the market as being overvalued. As in, there was so many offers and so many competitive situations that buyers were just driving the price up for such small houses, for lack of a better term, that were selling for sort of $1,400-1,500 a foot. That probably should have been selling for $1,250 to $1,300 a foot at best. But because buy demand was so strong, the Mill Valley market just skyrocketed basically throughout the entire pandemic. Like, it really hasn't slowed down. Potentially until sort of the end of Q3, when August and September started to roll around. August is traditionally sort of a slump month because most buyers, it's usually the last month where parents don't have school responsibilities, and there's a handful of long weekends where you can sort of go and travel and enjoy summer. So usually August sort of tapers off and slumps, and this year was really no different. The median price for homes really fell off. I mean, 50 to 70,000 doesn't sound that much, but it is somewhat significant when it's over the course of 160 houses, or at least sort of 100 median price point houses. The condominium market drastically slowed down, actually. We started to see it take over a month. I think the average days on market for condominiums was 37 throughout Q3, whereas in Q2 it was less than a month. The median price point for a house jumped to 2.4. But it took a little bit longer than usual to sell median price point homes. It took over 3 weeks, about 21 days to sell a house, whereas the luxury market was almost moving just as fast, purely because I think what a lot of people, especially in San Francisco and sort of surrounding markets, did, what a lot of wealthier demographic buyers did, was they waited and held their real estate assets in depressed markets like San Francisco, Pacific Heights, Presidio Heights, the Marina, that sort of thing, where real estate definitely took a dip throughout the pandemic. I think a lot of buyers with means and with wealth waited until those assets sort of began climbing back up before cashing out and then buying something where they really wanted to buy, like a Mill Valley, like a Sausalito, a Tiburon, a Larkspur. Which I think justified the speed of that luxury price point market. But in general terms, I think Mill Valley was, at least from a buyer's perspective and from representing a handful of buyers and writing some offers throughout the quarter, I think a lot of median price point buyers saw the market as potentially a little overvalued, and they held off from continuing to compete and drive prices up. They held off, and they're probably going to re-enter the market right about now, sort of towards mid Q4, where the holiday market starts to kick in and less buyers are competing for houses. So where that leaves us in still a seller's market is, if you are thinking of selling or you need to sell a property this year, there's probably a 4 to 6 week window right now between the start of October and mid-November, sort of just before Thanksgiving hits, where there's still going to be a huge influx of buyers wanting to buy homes, a whole lot of buyer attention, to still sell for a top dollar and drive that price up and get competing offers bidding on your house. Whereas if you're buying, best bet is actually to wait a little bit. I would wait until post November, like post Thanksgiving, early December, where there's significantly less buyers in the market. If somebody's selling a house, if somebody has a house listed over the holiday season, as a buyer, you're actually in the driver's seat because you know that they probably have to sell that property now. Otherwise, it's definitely in their best interest to wait until spring of 2022 where that market starts to climb again. So from a buyer's perspective, hang tight just a little bit, wait for the opportunistic sales to sort of start to hit, where instead of it being 1,500 bucks a foot like it was in Q2, you might actually be able to buy things for 1,250 a foot. And when summer rolls around next year, it'll probably spike right back up to that 1,500 bucks a foot range. So you've actually saved yourself potentially like a couple of $100,000 on that purchase just by being opportunistic and waiting until there's less competition.